Hey traders, what's going on? Jamie Saettele here with SB Trade Desk, and we're doing a quick video here on the New Zealand dollar ahead of RBNZ. So Kiwi, since breaking down at the end or towards the end of April, April 26th, the breakdown here, it's gone sideways in a fairly herky-jerky fashion. And, this could end up being the price action from down here could end up being a triangle, um, you know, A, B, C, maybe down in D, up in E, and then lower into finally down to the 66.89 area, which is the 618 of the entire rally from back at the 2015 crash low. Still a possibility there. But I'm actually wondering if there is a bigger low in place. There's reasons to suspect that you could actually see some sort of upside with New Zealand dollar, and I'll get to some of those reasons in a moment. But first, why don't we look at the the slope considerations on the daily chart? So with everything, the slope's defined by the trend line from September 2015, okay, to January 2016, those two lows. All right, you've got the upper parallel, which was resistance at the high in February. Okay, fair enough. The median line, not a whole lot until really it was resistance in March. The more important level is really this 25 line and the parallel just above it, which crosses off these lows back in March of 2016. And then, of course, was support recently, right? March of 2017, April 2017, and then just resistance last week. So we're very close to that, clearly. And that's still a level to pay attention to for resistance. It's, for all intents and purposes, it's the high from last week, up at 69.68. Okay, so that is a level to pay attention to with RBNZ. I'm not sure, RBNZ is kind of a tricky one. A lot of times, just trading wise, because especially when the time of day it's released, it's coming out at rollover. So it comes out at basically the most illiquid time of the day. So your spreads are going to be wide anyway, and you can it doesn't take a lot to move the market. So usually it's not the best idea to try to trade, right after RBNZ. But looking at the chart, this is a big area at 69, 65, 69, 70. However, on the near term chart, okay, if I go to a shorter term chart, and again, if this is a triangle, your count would be something like this. Okay, you'd be looking at probably like 1, 2, 3, 4, 1, 2, 3, triangle 4, and then a final 5 down into 66.89. All right, so that gives you right here. I wouldn't really necessarily put on a trade again. RBNZ is coming up, but that gives you an A, B, C, triangle D, and then last move up in E would be the one to sell. So just keep that in mind as something moving forward. However, there is a slope to pay attention to for potential upside, and I'm not trading on this yet, okay, because again, the structure, I still have this resistance in the way. We still have, I think the triangle counts better, right, than finishing off the decline like this. All right, that would finish better if completing a triangle and then spilling to the final low for a bigger bottom at some point over the next couple of weeks. Still something I think to consider. But if we were to surge up through this level, all right, so RBNZ comes out, it does what it does. Let's say that you get a surge up through the median line in 70 and we're holding above it. Then we would have an opportunity to be bullish. Okay, and you would be looking to probably buy back into the median line because the median line would have been resistance before. In fact, it was resistance 2 days ago. So yeah, so if you were to see something like this, it would be worth, say RBNZ comes out and it goes whoop, right? Then you'd be looking to buy down into the median line. Okay. So those are your two kind of scenarios, with the preferred, if you will, scenario being that we're in a triangle and that you're going to see, a little more contraction within the triangle. With the alternate scenario being if we surge higher, we'd be looking to turn bullish on a median line pullback. Okay, now if I look at, bring in the other charts here, it's one reason that you might not want to think that a big low is in place for Kiwi is the fact that we haven't, bottomed on any sort of meaningful support, supposedly, right? But that's actually not true. So we have a square root level here. You can see the square root levels. Kiwi loves its square root levels. Just last year, for example, top on square root level, top on a square root level, top on a square root level, right? Real nice. So we have a bottom so far on a square root level on 5-4, right? So we've got a very early month low. Okay, here's May 1, May 2, 3, 4. So we had the opening range set for the month and an early month low so far. So you do have a square root level under price. So that is a positive. If you were to break higher, it would give you kind of more reason to suspect that maybe you actually do have a longer standing low in place. Also, New Zealand dollar COT, and we've looked at this before in some of the updates and in the midweek webinars, but recent speculative shorts, commercial longs, they're most extreme since back in July of 2015. That did end up being a low, although it was not the low. The low came back in August on the China crash. Okay, but you still had a bounce and a period of consolidation that lasted for 6 weeks. All right, so that was just 2 weeks ago when we had the extreme COT, and the lows so far is just 1 week ago. So there still is that to consider for upside surprise, right? Extreme positioning as far as Kiwi's concerned. And finally, we get the seasonal aspects. Seasonality actually for New Zealand dollar turns up this week. Okay, not this week, after this week. So seasonal tendencies do turn higher across 15, 20, 10, 15, and 20-year time horizons. The 30-year time horizon actually does not turn up until the very end of this month, whereas the 5-year also turns up towards the end of this month, right? But basically, you have a window there where between now, or after this week and the end of May, a turn higher in Kiwi would be within the realm of historical seasonal tendencies. So there's a lot to deal with in the video. Basically, if I can sum it up, I think there's a lot in the technicals for an upside surprise in Kiwi, whether it's the seasonals, the COT positioning being extreme, the fact that you do have a square root level under the low, okay, right here. But as far as being long into RBNZ, not really my thing. So the way to play it is one of two ways. If we dip and then get a little turn higher over the next couple of days, we'll be looking at a triangle before we get one final spill lower and then the big reversal higher. If you do surge higher, after RBNZ or whenever over the next couple of days, if you do surge higher, then that short-term bullish fork that we were looking at will be in play, and that's what we'll be looking at to position for additional upside. All right. Okay. So I will leave it there. Hope the video helps, and good luck. All right. Take care. Bye.